Hey, what's up, everybody? Let's get this thing started. Where's everybody calling in from? What's up? What's up? Paulina, what's good? We got New York in here. Hey, can you hear me good, Alex? Yeah. Can everybody hear me clear? Or is it kind of low? All right, perfect. I think I was just talking low at that time, but yeah, what's up? How's everybody doing? Hope you had a great week trading so far. Definitely getting a lot of feedback from a lot of people that are, starting to identify these harmonic patterns and spot them out with their naked eye. So that's a good thing. People sending me DMs and screenshots of what they see in the markets, and that's pretty dope that you guys are starting to catch on. Like I say, once you guys start catching on to these harmonic patterns, then everything is going to start, flowing a lot more frequently, and it's going to become easier when you start trading, because then you'll be able to just come to the market and be able to, your eyes will just automatically pick up on these different type of movements like this right here, which is a bearish Cypher pattern, and this right here in white, if I zoom out, is the is a crab pattern. So yeah, and this is on NZDJPY. We've been on this trade for about what day we entered on at the D entry right here. So we entered on this trade November 18th, matter of fact. So we've been riding this thing for a minute. And that's one thing I want to talk to you guys about also today, is the mindset when you are trading harmonic patterns, right? Keith, what's good? So yeah, that's one thing I want to talk to you all about today when you're trading harmonic patterns. Like, this right here happens, especially on the higher time frames. Like, this stuff happens. The market will come up here, hit your entry zone, and the market will start to consolidate. All right, that's perfectly fine. Like, this right here is giving me no indication to exit this trade. I have my stop loss up here. I was able to catch another harmonic pattern, what you see right here on Friday in the markets, and still be able to hold my original position. So my original position is around here, and I was able to identify this other harmonic pattern that happened, and it was going directly with the trend of the pattern that we have established right here in white. Again, let me zoom out real quick so you all can see. Let me go to a higher. Yeah, let me zoom out. Let me just zoom out. And yeah, it's all about having, the mindset, right? Now, when you trade in harmonic patterns, when you trading, right, first off, you guys want to be able to create a system. Okay. My style of trading is harmonic patterns. This is the system that I follow by strict rules. I have a surprise for you guys at the end of this at the end of this call as well, so that you all can understand the specific ratios that I look for when I'm trading harmonic patterns. Like I said before, some people that trade harmonic patterns, that they use different Fibonacci ratios, which is perfectly fine. But I use a strict set of rules that allows me to be able to see it black or white. If it hits this level, then it's valid. If it doesn't hit it, it's not valid. So I want you guys to have those same rules, or same black and white rules, when you trade in harmonic patterns, because when you trade in harmonics, even when you just trading in general, right? You want to be able to not give yourself room to think. That's what I'm trying to say. You don't want to give yourself room to think when you're trading. You almost want to be somewhat robotic. Yikes. Give me 2 seconds. All right. Give me 2 seconds. All right, thanks. I appreciate that, Lamarck. But yeah, you almost want to you want to be robotic when you come into the markets. You don't want to give yourself room to think. Oh, nice surprise, that Harmonic album dropping. Harmonic album. Yeah, I got you. Yeah, you don't want to give yourself room to think when you're trading, all right? Because when you start thinking, you start, seeing things that shouldn't be there. You start looking for reasons why you should exit this trade. Like right now, I'm currently in this trade right now. I've been through this entire ordeal right here. Was hoping price continue to push down and hit target 1, but it didn't. But you guys start, as a new trader, you start, inventing stuff that shouldn't even be there, right? You start psyching yourself out of the trade, and you shouldn't even be doing that. You start, when you start looking for stuff, you're going to find whatever you're looking for. And when you start looking for things in the markets, when you're trading, you're going to start looking for all the reasons why you should exit a trade, why you should take profit early or whatever. The cool thing about trading harmonic patterns is that you guys got to just set it and forget it. Like I was in profit. Let me see how many pips I was up on this trade. I think I was up about, I entered somewhere around this area. I was up about 90 pips off of that trade right there off my first position. All right. And I'm currently sitting at about 6 pips right now, which is perfectly fine. Right. As long as I don't have any reason to exit this trade right now. Set it and forget it. That's what I love about harmonic patterns. You don't have to sit there and babysit your trades at all. Like my stop losses right here, when you start adjusting your stop losses and moving stuff and tweaking things and messing with the numbers mathematically, you start messing with your chances, you start messing with the chances of you start interfering with your system. And we all know that systems work. People don't, right? A system will outwork a person every single day. And you don't want to start interfering with the ratios, and you don't want to start, interfering with adjusting stop losses and, being afraid, getting scared out of the trade because you were up 90 pips, now you're down 60 pips. Now you're up 6 pips and so forth. Guys, you just want to stick to the plan, let the trade play out. And if you have a proper risk management, then honestly, you really shouldn't have any reasons to, feel a certain type of way once you enter a trade. The easiest thing to do when you're trading is identifying the pattern. This is honestly the easiest part for me when I first got started trading, was once I understood how to identify these patterns right here. The easiest part was to identify it. And like I said, I see a lot of you guys on this call right now that are actually sending me screenshots and stuff of the patterns that you guys been with me for a couple of weeks now, about maybe a month, and you guys are starting to already see this with your naked eye. So again, that's the easiest thing. This is the hard part right here. So let me draw this out real quick. All of this right here, this is easy. Okay, that's easy. This right here, from the D point on down, this is hard. And this is where a lot of people struggle right here. Okay, this is the hard part, because it has to do with the mentality, your mental aspect. That's what this has to deal with. Okay, this is the hard part right here. Now, I was talking to somebody today, and it was like, Ray, yo, man, appreciate it. I see the harmonic patterns and everything, and I saw the harmonic pattern. I think it was a bat pattern that they identified. I forgot what pair it was, but it was like, yeah, I see the harmonic pattern, but Guess what? When I saw it, I was afraid to enter. And he said, then the trade went on and dropped like 50 to 60 pips, if not more. And now I'm kicking myself in the butt because I was afraid to enter the trade. That's why having a system, it works. You follow the system right here, the harmonic patterns, be able to identify it, enter the trade with confidence. That's what trading harmonic patterns allowed me to do. It allowed me to enter these trades with confidence every single time. And it got to the point where I was nervous because I kept seeing these harmonic patterns happen time after time after time after time. And I'm sitting here thinking like, dang, these patterns happen all the time. But now it's starting to play with my mindset because I see it all the time now. It's like if I tell you guys, we start talking about a Lamborghini right now, you guys haven't seen a Lamborghini all week, but as soon as you walk outside, boom, you see like 4, 5, 6 Lamborghinis ride past you. That's what harmonic patterns are. It's going to start allowing you guys to see these patterns pick up in the market. Your eyes are going to start picking up on these harmonic patterns every single time. That's why I tell you guys to master one harmonic pattern, because there's so many different harmonic patterns out there, so many different ratios, and you guys, I don't want you guys to get confused. That's why I'm going to do a video series. I'm kind of giving you guys a surprise right now. I already told you it's like a couple about thing like last week or whatever. I'm gonna go through and give you guys a video series of the exact ratios I use with trading harmonics step by step, and you guys can decide from that point what harmonic pattern you want to do, which one you want to stick to and use. So again, this is the easy part, being able to identify it. The hard part is going to be the mental aspect. Now, if you're new on this call, this is going to be kind of challenging at first, but again, don't get discouraged because you can't identify it with your eye, because this is new to you, right? But once you do it, everything's going to start flowing. The pieces are going to start flowing together. Let me read some of these comments real quick. Let's see. Okay, so if we are to not think with harmonics, what should we do when trading with the harmonic scanner? I noticed that the scanner will change and remove patterns, then get stopped out, stop losses. That's why being able to identify these patterns as well, being able to look at a naked chart and see these different patterns, it'll help you out. Yeah, the scanner, it does, sometimes overpaint, and the reason why I say I'm pretty accurate with trading harmonic patterns because I have specific ratios that I use. That's why I like to say I'm pretty accurate when I'm trading harmonic patterns. Like, it's either black or white for me. It's not no in between or this and that. Like it's strict. It's by a strict set of rules. And I'm gonna show you guys a couple patterns that I see right now in the markets as well. So. And then again, on the harmonic scanner, sometimes the stop losses are a little bit too close. And again, that's to protect you as a customer, because a lot of people do come in, they don't have the right mindset. They start seeing these patterns pop up and they want to drop the kitchen sink on every single trade and end up, blowing accounts and stuff because they didn't use proper risk management. So that stop loss might be pretty good, that it's tight for, a new individual that comes in. And don't understand exactly what's going on. But as you can see, my stop losses are not they're pretty, they give my trade room to breathe. That's what my stop losses do pretty much. Honestly, sometimes, and like I said, I don't like to tell people this, but sometimes I don't use a stop loss because the way I handle that is by lowering my lot size, like, to a position where I don't even have to worry about if I'm, 100 pip drawdown, 140 pip drawdown or whatever like that. So you do, don't be, and again, people will say, these tight stop, your stop loss is too big and this and that. No, guys, we're trading, okay? Like, there's no such thing as a too big stop loss or whatever. You picking out a high probability area where the market will reverse, and then you enter the trade. Lower your lot sizes if you're afraid. Build that confidence. That's what I used to do when I started trading harmonic patterns. I would lower my lot size, and I would definitely have more confidence when I'm entering these trades, because I don't have to worry about, oh man, I'm I'm like 80 pip drawdown or whatever like that. My charts, not my charts, but my margin call and everything is bleeping red. I know some of y'all go through that, right? And And you know, just lower your lot sizes and start doing the you know, things a little bit different. Like little things like that can really, you know, help you. So again, I don't really care too much for like a stop loss. Like if I give you guys a stop loss, it's because, and I'm gonna show you guys on AUD USD, for example. If I give you guys a stop loss, it's because I'm here to protect you guys as well. But for the most part, if I feel like because I learned the market's humbled me. Okay, I understand how to use the proper risk management now. So, you know, I used to do like reckless stuff in the markets, and sometimes I would get too good for my own self, and then I would get into a trade like this, and then boom, the market will, you know, go in my favor. I'm up, you know, I'm on a heavy lot size. The market go in my favor, then boom, it'll reverse stop me out. It'll reverse stop me out, and then boom, drop like 300 pips. I'm like, bro, what the heck, yo? And I'm like, okay, cool. You know, let me just do it the right way. So again, yeah, trust the process. It was EuroCAD, and that was me, bro. Yeah, Brown, that was you. Yeah, EuroCAD. I'll go over that too. Very new to trading and learning harmonic scanners, trying to get a full understanding of it. All right, definitely, Ava. Just stick around. Harmonic patterns of life. Yep. You come to the right place. Yeah. See what kind of question. NZDJPY market sell. Yeah, Juan. I'm actually in a sell on NZDJPY. My stop loss is at 78.000. So again, if you want to enter that, you know, feel free. But I caught like 100 pips off of this entry right here to the downside. Caught this move. I think this was about a couple hundred. I know how many pips was that. Hold on, let me see. This right here was, I actually had like a wick entry right there. This right here dropped like 108 pips, which is pretty dope. But yeah, like I say, I'm still in this trade. Expecting it to push down to at least 7.5, 500. So yeah, guys, this right here is the hard part. I don't use stop loss trade harmonic patterns. I noticed USD JPY in a 4 hour. Yeah, USD JPY has a bat pattern on it. I'm gonna check that out. I'm gonna go over it as well. It's a bearish bat pattern. Fools in a harmonic chat room asking, oh folks, what is that? Fools or folks? Folks, all right. Oh, he dropped it in the. All right, cool. So check this out. So I'm gonna go over. So like I said, I'm still in this trade right here. NZD JPY. I've been in this trade since November 18th, and you know I'm perfectly fine. You know, trading harmonics is gonna help you build that confidence and help you understand that you really can't play with the mathematical rate numbers when it comes to trading harmonic patterns. Like I say, when you're trading harmonics, there is no such thing as time. People ask me, well, how much time? Well, when do you think it'll hit target one? I have no idea. I see the pattern, okay, and I execute. That's it. I see the pattern and I execute. And that's how you guys should start trading too. You should be able to identify these patterns and execute the trade. That's how simple it is. And whatever else happens after that, it happens. Everything is out of my control. I don't know if I'm going to get stopped out. I don't know if it's going to hit target one. I don't know what's going to happen. Everything that happens after this D point is out of my control. I set my stop loss and I forget it. I go on about my day. I don't have to sit here and worry and babysit my trades. Can we still get an NZDJPY? Yeah, you can still get into it. Like I say, put a small lot size position on it. This is my stop up here. You can see my stops is at 78.000. And like I said, I'm waiting for this thing to turn over and hit target one. So yeah, you can definitely enter. And I'm gonna go over what trade was that? So right now I'm looking at GBP/JPY. I see a couple things on this pair as well. So GBP/JPY, I was actually looking at this on last Friday, I believe it was, and I was waiting for price to pull down and give me an entry point within this little area right here. As you can see that I have highlighted at this D point right here. And price failed to hit that area. And again, when you see stuff like that, you know, it's perfectly fine. Move on, go on to the next pattern. Don't worry about anything. This is a bat pattern right here that we see. And what you guys got to understand is that, yeah, you know, every setup that we have, it doesn't hit. like this one, guess what? No money was lost. You know, so what if price didn't push down into my zone where I wanted to go, but at least I had the right idea. I had the right concept, right? So my pending orders are deleted off of this pair right here. Now, my next trade opportunity that I see, and I see a big Gartley pattern on GBP JPY. My next trade opportunity is right here. Price push down into this zone right here. And like I say, you know, when I'm trading harmonic patterns, when I'm trading the Gartley pattern, you give you 2 entry points, right? You have 2 entry points when you're trading the Gartley pattern. You have the 78.6 level, and which is the top of this box, and then the 1272 level, which is right here at the bottom. So this is a zone that I like to enter out of. So more than likely, I like to take the full capacity, not the full capacity, but the full the maximum extreme of this pattern, which is at the 1272 level. That's what I like to do. So what I would do, I would front run my order, put my order just a little bit above that 1272, and then I would just, you know, set my pending order and go. USD JPY is almost similar to NZD JPY. I'm about to check that out for you. Actually, I'm gonna show you something on USD JPY as soon as I go over this real quick. I'm in NZD JPY for a sell. So looking at this right here, and so if I was to, you know, come to my naked chart, right, and, you know, just identify these harmonic patterns for you. So if I go ahead on it, let me just delete all this stuff off my chart real quick. Let me clear that, and just let me come here and delete all of this off my chart. Remove all drawing tools. Guys, you all understand that, and we kind of talked about this last week. There are only 2 things that I like naked in this world. Who can give me the answers? The only thing that I like naked in this world, the 2 things are my charts, like this, my naked charts, and let's see who got the answer. Charts and my juice, exactly, my naked juice. Guys, I'm drinking some right now. You all got to get some. So let me show you guys something real quick too. So even if I go back, right, I'm just gonna take this little area right here, okay? I'm gonna show you guys what I see in the market, okay? So looking at these charts, I see we have a level of resistance right here and a level of support. This is the foundation of harmonic pattern, support and resistance, okay? And normally it'll happen after a period of consolidation. The market will push down and it'll start to consolidate before it makes up its mind, okay? So we can see that's exactly what we have. We had that period of consolidation right here, okay? Market pushed up, gave me that level of resistance, and then it dropped from that point. This is automatically what we call an impulse leg, where the market makes up its mind after a period of consolidation, all right? And I just want to, you know, show you guys this area of what I see. Matter of fact, looking at this, can you guys tell me how many harmonic patterns you see within this section right here that's highlighted? Let me move this over to the side. Can you guys tell me how many harmonic patterns do you all see within that section? Someone says 3, 2, 4, 2, none. Daisy, you'll get there, Daisy. Keith said 3, 3, 3, 3. All right, let's see. So let's see, 3, 3, 3, 4, 4. All right, cool. So what I'm going to do right now, like I said, guys, this right here will be my level of resistance up here. I'm just going to put resistance, RES. And that level of resistance is now, give me 2 seconds. I hope everybody's in here. Link is right there. All right, so looking at that level, this is my level of resistance right here, okay? I got my level of resistance. And what we do is, I got my level of resistance right here. This is already established as my X leg. The market right here then pushed down. This is what we call our impulse leg to the downside, all right? I'm really gonna dumb it down so you guys can really understand this, okay? Just the same way I had to learn. and it price pushed down to give me that level of support. So when I see this right here dropping, all I'm going to do is wait for price to give me that level of support, and this is what we have right here, our level of support, okay? This level right here is our support level. And again, mind you, all of this to my right have not even happened yet, okay? I'm just following the market from where price really is, from this X leg all the way to that A leg, okay? So now that I have that level of support already identified, right, what I want to do is take my Fibonacci tool from my X leg all the way down to my A leg, and I want to see how far price pulls back, all right? I want to see what this level right here gives me. And those who've been with me hit the 61.8, what should we be looking for? Price hit the 61.8 right here. What should we be looking for? A Gartley pattern. All right, perfect, perfect. Nice. Lamarck is always on point, yo. We're looking for that Gartley point, that B point. Okay? That's what we're looking for. Now that we have that established, we follow the market from this B point, all right? We have to follow the market from the B point. I see somebody said something. Candles close above the 61.8. Yes, the candles can close above the 61.8 as long as price does not touch the 78.6 level. And you can see price never hit that 78.6 level, so we're perfectly fine. All right. So when we're looking at this market now, what we want to do is follow the market from that B point. So that's all I'm going to do is wait and see how far this pulls back. So what I'm going to do, so my X leg plus my A leg gave me my B point, okay? That B point is a 61.8. 61.8%. Okay? So if price goes to the 61.8, it's a Gartley. Exactly, Daisy. See, look at you. You already learning. I like that. Everybody drop some fire emojis for Daisy. So price came so the X leg, which is right here, all the way down to the A leg. That's why I took my Fibonacci from that level of resistance to the level of support. X to A equals your B point. That B point should line up with that 61.8 minimum. And this is only for the Gartley pattern. If price didn't hit that 61.8, then I wouldn't have taken that trade, but we can see that it clearly smashed it right here. So now that we got that 61.8 level retracement, what I want to do right now is go ahead on and take my Fibonacci. I want to take it from my A leg. I want to take my Fibonacci retracement from my A leg all the way to my B leg, to wherever that B point completed, all right? And we can see that we have that, where's my pen? There it is. First session, I see what you're saying. Oh my God. So how did you get those numbers on the chart? So the way I got these numbers on the chart, you talking about these fib numbers right here, the 61.8, the 78.6, and so forth? Is that what you're talking about? Yeah, this is my Fibonacci tool. They automatically come on your chart. So if you go to TradingView, that's why I recommend everybody get TradingView. You can go to tradingview.com. You can get you a free account. You can, have these tools right here. So now what I did was I took my Fibonacci from my A plus B equals my C leg. That's not a C, hold on, equals my C leg equals C. And that level, that Fibonacci retracement level should hit a minimum 61.8. Okay? I know these numbers like the back of my head, yeah. Back of my hand, not head. Well, I got them stored in the back of my head too. So we can see that price from this A point all the way up to this B point, it retraced. All I need is a minimum of a 61.8 for this to be a valid pattern. We can see that price came down and gave me that 88.6 touch. Don't let these numbers scare you. They're here to guide you, okay? Price gave me that 88.6 touch. Now guess what? Now that I have that touch already, now that I have that 88.6 touch, what I'm looking for, again, price, this right here is still valid because price did not break below the A leg. If this right here would have pushed down and broke below the A leg, this right here would have been invalid. But price did not do it. So price can come all the way down to the minimum 61.8. That's the minimum touch we need for the C leg. It can go all the way down to the 78.6, the 88.6, even come down to the 100%. It can come down and wick it. But as soon as that wick closes or passes below the A leg, that marks this pattern invalid. So we can see price held at that 78.6, that 88.6 level, right? Which is right here. So now what we have identified is our C leg. Guys, I'm taking you all step by step on how to spot these patterns out with the naked eye. So now to get the completion for the D point, what I'm going to do is, and also guys, pay attention because this is how you, what I'm doing right now. Yeah, that's right. So yeah, what I'm doing right now, yeah, go ahead on screen. It's like I'm actually recording this also, so you guys will get the recording. You can go back and learn it, and you know, so you know, just pay attention. Don't do anything right now. Like I said, this is being recorded, so you all can go back and learn everything. So just pay attention to what we got going on right now. So if you pay attention to what I'm doing, I'm teaching you guys how to back test as well, because a lot of people try to identify these patterns in hindsight, like in the now. The best way to train your eye to see these patterns is to go back in the charts, scroll back as far as you can, and start identifying these patterns like I'm doing right here, right now for you all. And I promise you, you know, the first steps is to, you know, help you guys identify these patterns. Now, the next step that I do is I'm looking for a zone. I'm not looking for a specific entry point. I'm looking for a zone. So what I'm going to do is take my fib from my X leg all the way down to my A point. And all the way down to my A point. And I'm looking for a price to complete at a 78.6 level for my for my zone. So I'm gonna put a trend line on at 78.6, okay? Grab my trend line, and I'm gonna throw it right here on top of the 78.6 level, which is right there. And then I'm gonna delete this fib. What I did was I took it from X to A to get my D point. And what I'm gonna do right now is take my Fibonacci. Matter of fact, I'm gonna make it simpler. I'm gonna make it simple for you guys. I'm gonna take my fib because I can use my fib extension or my fib retracement. And I'm just gonna take my fib from my B leg all the way back down to my A point. And I'm looking for a 1272. I'm looking for a 1272. Okay. So again, if I use my Fibonacci extension, I'll show you guys right now. What I would do is I would take it from, and you don't have to use the Fibonacci extension. I like to use it. You can take it from A to B, all the way back down to A. And you can see that 1272 level right here on the Fibonacci extension lines up with the Fibonacci retracement level. These are my extension points up here, the 1414, 1272, 113. Same thing right here, 1414, 1272, 1113. So again, you can use either or. It really doesn't matter. It's just whatever you feel, you know, whatever your preference is. Do you ever teach on FIU's campus? Yeah, I actually do go out to FIU. So now from that point, what we want to do is, let me throw a trend line on top of this 1272 level right here. And I want to highlight this as well. Where's my highlighter? Which is right here. So I want to highlight this zone right here. This 1272 all the way down to this 117 level right here. And I just want to extend it out. All right. All right, so check this out. And let me go ahead on and write this down. To get my D point, which is right here, the D point, what I did was I took my fib from X plus A equals D. And that D point should equal a 78.6%. And then I took my fib from and then I took my fib from A. No, I'm sorry, I took my fib from B. I'm thinking about the Fibonacci extension. And then I took my Fibonacci tool from B plus A equals D as well. And this is a zone, and that should equal a 1.272 extension, 1.272 extension. Okay. So these two are together. And this is what we're looking for, is a zone. Okay. What we have in the pink up here, right here, is a zone. All right. So now what we have to understand is that we have this right here. We have our X leg, our A leg, X to A to B, B to C, C completion up here at the D point. And then we have this big sell off right here to the downside. Just by following these rules right here that I have written out based off these Fibonacci rules. So when all of this happened right here, when this pattern right here, you know, when I spotted this pattern, all I did was I didn't give myself room to think. Everything lined up. X plus A gave me my B, which is 61.8. Okay, cool. I know what I'm looking for. By the time you identify your B leg in the market, guys, you should already understand what you should be looking for. Then A plus B, you know, equals C. I'm looking for a minimum touch of a 61.8. And then from X to A, to find my D point, give me my 78.6. And then, you know, if I'm doing it, then I'm looking for the zone. I'm taking my field from my B point to my A point for the D. And that gave me my 1272 level. Is this the Gartley pattern, the only pattern you use Fibonacci extension for? No, it's not the only pattern I use Fibonacci extension for. I use it for the Cypher pattern, and I also use it for the shark pattern. Did you put a trend line on the 38? Why did you put a trend line on the 38.2? I never put a trend line on a 38.2. This is a Gartley pattern. I will post this in my Pip Talk channel and probably the Telegram group as well. I only use the extension tool for a few patterns. Fibs are using all the patterns in pairs. Yeah, Fibonacci use. Could you show how to draw the pattern again, please? Thanks. Yeah, for the sake of time, what I'm going to do is have you watch the recording. He's talking about that zone in between the fib levels. I don't know what zone he's talking about. You don't have Telegram? Yeah, my Instagram is a billionaire. Somebody can drop my Instagram inside the chat. That'll be dope. So this is the Gartley pattern, and we had this major sell off to the downside. Okay. So when we had this major sell, I'm about to erase this all on my chart so you all can go back and, you know, watch the recording. So let me clear all that, clear my charts up, and let me delete this right here. So that's one pattern right there, okay? And I'm gonna show you guys how strict I am with my rules, all right? Look what we have here. We have another impulse led to the downside. Another impulse led to the downside. And then we have a retracement right here. So again, this D point now becomes my new X point for a new harmonic pattern, all right? Just because the market, you know, you enter your trade, whatever, like this is how you stay ahead of the game. This is how you stay in the zone. Just because the market you know, gave you your entry point at your D and you sold it and caught, you know, hella pips, guys, it don't stop there. Stay in tune with the market, because guess what happens right now? I now have my X leg, my level of resistance, which is up here, and price pushed down and gave me my A point. This is the first and foremost level of resistance up here, resistance, and my level of support right here where my A leg is, support. Okay. Yeah, my IG is billionaire. GJ look like a couple of months of pay at my regular job. Yeah. So again, this same exact pattern right here, this Gartley pattern, watch this. And this is, again, this is how you all stay in tune with the markets. And you know, yeah, you know, feel free to, you know, you catch a harmonic pattern, you catch a drop like this. I think this might be a couple hundred, probably about 300 pip drop, maybe a little bit more. Yeah, celebrate. But you know, when you trade in, don't let the highs get too high, don't let the lows get too low. You got to keep an even kill, right? That's like one of the biggest things I can tell you guys. You know, keep that even kill every time you enter the market. When I was playing pro basketball overseas, all the way through high school, college, when I played over in Europe, Italy, you know, all of my coaches say the same thing. You know, don't let the highs get too high, don't let the lows get too low. You have to keep that even kill. Same thing when you trade on harmonic patterns. All right, you have to keep that balance, right? Don't get ahead of yourself and don't get down on yourself whenever things are not going right. Because sometimes you can trade the perfect system, and you trade in that perfect system, and what happens is you might hit 2 losses in a row. That doesn't mean stop, no, especially when you trade in harmonic patterns, because they're so accurate. Keep going. Don't let that stop you from what you're doing. So again, what I'm gonna do is take my Fibonacci tool from my X leg all the way down to my A leg, and I want to see what this level gives me, okay? Let me line this up. So we can see price. Let me zoom in some. So we can see price came all the way up here and gave me basically a 50% touch. See how strict I am when I'm trading? Look at this space in between this. Look at that space, guys. Price did not hit the 61.8. Guess what it gave me? It gave me my 50% touch. Guess what I'm looking for right now based off of this move right here? Who can tell me? Yeah, my Telegram is for my team only. What I might do, I'm thinking if I should open up a Telegram and let you guys in for like discussion and stuff like that. So, but for right now, I just use the what's that Telegram called, guys? Damn, what the hell is that Telegram? The Harmonic Scanner Telegram. Yeah, I'm tripping. I use the Harmonic Scanner Telegram. My name is Ray Robinson, for those who don't know me. And then my handle for the Telegram is called Billionaire. It's the same as my Instagram. So I'm looking for a bat pattern right now. All right. This is what I'm looking for, is a bat pattern. For the bat pattern, you need a 50% retracement. 50% retracement for the B leg. You see how strict I am with my rules? Some people would have been like, well, it hit 61.8. I mean, well, it fell just a little bit shy below the 61.8. Oh, let me call that a Gartley. No, it did not touch it. So therefore, it's not a Gartley pattern. I'm looking for a bat pattern right now because of this move right here. It hit the 50%. So again, based off that 50% level, I'm looking for a bat pattern. So let me go ahead on and write these ratios out for you guys real quick. So the bat pattern, again, X to A, X plus A, equals B. And that right there equals a 50% retracement. Okay. Now what I want to do now is identify my C leg. So I'm going to go ahead and delete this fib. And I want to take my fib from my A point all the way up to my B leg. I want to take it from A all the way up to B. And look what I'm looking for. I'm looking for, let me do this, A to B, A plus B. My fib, A plus B equals C. And I'm looking for a 50% retracement. Again, if it didn't hit the 50% retracement right here, I would not trade it at all. Nah, the 50% of the B leg can be the Cypher, but we can see the C leg did not break below the A leg. That makes sense. If this C leg would have continued to push down below the A leg, then yeah, we would be looking for a Cypher pattern, but the C leg did not do that. Nah, you're not tripping. So now this is my C point, all right? Got my C point. Now I want to find the completion of this move. Who can tell me the level that the bat pattern completes at? Take my fib from X plus A, and that equals D. That D point should be, let me see what they say in the chat. 88.6, exactly. That D point should be the 88.6 completion for this bat pattern. Guys, all I'm doing is following the rules, following the system. That's it. And everything that happens after that, I go on about my day, and you know, I'm not stuck at my charts, you know, trying to babysit. So I'll take my fib from X all the way down to A. X plus A, look at the formula to the left. X plus A equals D. And that D point completes at the 88.6. Let me line that up perfectly with the A. So that this right here is my D point. The price completed at the 88.6. Now look at this right here. Look at all this drawdown up here. Price just bouncing around. Guys, I'm going to tell you a secret. 95% of your trades are going to be in drawdown. That's just a fact. You know, every now and then, yeah, you get these entry points where boom, it'll hit your entry and get out of that zone quick. But I say about 90 to 95% of the time, you're going to experience drawdown on your trade. And that's normal. So what if you're in drawdown? Follow the rules. Appreciate that, Jenica. Follow the rules. You follow the rules, you'll be straight. Don't worry about all that noise on the outside, whatever people be talking about. I don't know what they talk about. I don't even pay attention to other people that trade, honestly. I just focus on this X to A to B, B to C. And C completed at the 88.6. I'm sorry, the D completed at the 88.6. So I'm just going to go ahead and put my Fibonacci, not my Fibonacci, but my harmonic pattern at the 88.6. And I was in all this drawdown, which is perfectly fine. I never got stopped out of that trade because my stop losses go actually at this 1.13 level. So again, my stop loss would have been right here. But like I say, I like to put my stop loss maybe a little bit above. I play around with it or whatever. But this formula right here, follow the formula and stick to it. You don't have to worry about what's going on out there in the other world and, trend line break retest, or people see this big push to the upside and like, oh, snap, the market's going to continue to rally up to the upside. No. Because this is what the big boys are playing in the markets right here. The big boys are playing this. I guarantee you let a big bank or whatever spot a harmonic pattern on a chart, they gonna jump all over that thing. They might play around and scare you like this, or come up, because they know that you're a newbie trader and you probably can't handle the drawdown, or they might come up here and, push it up above the stop loss a little bit, scare you out, and boom, drop that thing. But let a big whale or a big bank or whatever like that spot these harmonic patterns in the markets. Like they just gonna jump all over it. You let me spot a harmonic pattern in the market, I promise you I'm gonna jump on it. I can honestly. Let me erase this. So I'm about to erase this formula down here. You all can go back and watch the video. So that's 2 harmonic patterns right there. And look what we have right here. We also have a demand zone. If I take this right here and extend it all the way out to the future, wow, look at that. Even more confluence, right? When you find a harmonic pattern within the supply demand zone, you can almost always, consider that a higher probability trade setup as well. Yeah, so I would set my sell limit at the 88.6. Daisy, I promise you, it's super easy. So check this out. So normally when I see the harmonic pattern complete that C point or whatever like that, I will go ahead on and just throw I will throw my what they call it sell limit right here at the at my entry point, and I can spot these harmonic patterns before they even happen, like a day or whatever before it even happens, or a week, maybe even weeks before it even happens. That's not an issue at all. And I'm not saying I can predict the markets or whatever like that. No, because I understand that this is a higher probability area for me to enter this trade for a nice sell opportunity. But I also understand how to adjust to the market as well. It's like when I was playing basketball. I'm gonna give you guys a good example. When I was playing basketball overseas, like the coach give you rules that you have to abide by. Okay, but here's the thing: when I'm on that basketball court, I can't necessarily be a robot, because if I see somebody constantly going to the right and they keep, scoring, going to the right, or if I see somebody on the court that's a shooter, and every time they touch the ball in the Pacific area, they shoot the ball, like your mind just has to pick up on stuff like that, right? You can't be blind to the fact that, that this person can't shoot if they get the ball. So guess what I'm going to do? Before they even catch the ball, I'm going to play up tighter. I'm going to play tighter defense on them so I can deny them the basketball so they can't catch and shoot it. Same thing with the markets, right? Like, I'm aware of other things that happen in the market. I'm aware of other different strategies and stuff like that. Yes, I'm aware of it. But I set my pen in order, and if need, then I adjust and play by the rules of the game. I'm not a sucker at all like that when I'm coming into the charts in the market. Yes, I'm a robot. When I spot these harmonic patterns, yes, I'm robotic, okay? These levels line up, boom, I set my order, going about my day. But if whatever, happens in between that, sometimes a harmonic pattern can get a little bit funky and, do all of this stuff right here and then go up there and hit your entry zone and then drop. Sometimes I might walk away from it. It's not a good trading day, because that has happened. Like, all of these levels are complete, and then the market just start to drift off to the side. And again, as long as the levels don't breach the other levels, it's still valid. But for me, I just like to walk away from stuff that looks like that. Okay, if it's not necessary, I mean, all harmonic patterns are not going to be clean cut. All right. Some might drift off to the side, and then boom, make his way up. That's perfect, and then drop. But all harmonic patterns won't look as sexy as this. All right. So yeah, these are Gartley's in a bat pattern. No, I'm on a 2-hour time frame just because it honestly, if you want to find harmonic patterns, so this is and these right here stick out too on a lower time frame. And I recommend everybody doing that on a lower time frame. Definitely go to the 5-minute chart. That's the lowest I go to scout the market for harmonic patterns. The same move that happened on a higher time frames, they also happen on a lower time frame as well. And they happen more frequently on a lower time frame. So right now, what I see right now, looking at the market, my A leg right here is my level of support, and I have it's going to be my new X leg. I'm going to follow the market all the way up. This is my level of resistance. This is my A leg. Now this is the inverse of this pattern right here. You can see right here, this was my, and you can trade it both ways. It's gonna be inverse as well. So you can see that this right here is my X leg right here for this pattern. Well, guess what? This is now my X leg down here. Right here is my X leg. You can see this is my A leg. Guess what? This is now my A leg up here. So you can trade this pattern both ways. This pattern over here is a bearish Gartley. This pattern right here will be a bullish Gartley. So check this out. So looking at the market right now, I already established my X leg and my A point, my X leg, and my A leg. And I'm going to take my Fibonacci tool again. Guys, nothing changed at all. Everything you see me doing is all the same. Take my Fibonacci and take this entire move right here from X to A. And I'm looking for that retracement level, which hit a 61.8, which is right here, 61.8. And now we have established my B point. See how simple this is? This is how I eat. All right. This is how I pay my rent. My rent is like $2,800, $2,900 a month, yo. This is what I do to pay my rent. X to A equals B. Okay, that's 61.8. Don't live in Miami, okay? Every time it gets to the D point, that means every time it gets to the D point, that's your entry point, either a buy or a sell. In this case, it's a sell because it happened twice. The D point happened right here, and the D point also happened right here. How long after marking the D would you tolerate consolidation? Until it hit my stop loss. What's your average stop loss? So on the lower time frames, it varies. On the lower time frames, my stop loss are going to be small because we're dealing with a smaller time frame. On a higher time chart, it might be 100 pips, give or take. Sometimes I don't think my stop losses are. I think that the biggest stop loss I use is 140 pips, but that does not mean that the market is going to stop you out or whatever like that. That does not mean you're going to be in 100 pip drawdown. That doesn't even mean you're going to be in 30 pip drawdown. That's just the rules of the harmonics. Just because it's 150 pips, that like I can set a stop loss for 150 pips, but that don't mean that it's going to push down and hit my put me in like 80 pip drawdown. That's just the rules of the game. That makes sense. So again, don't be afraid if it's if it's 100 pip stop loss or whatever like that. Just lower your lot size. So now I have my X leg, I have my A leg, and now I have my B point right here. That B point is always going to tell you what you should be looking for in the markets, always. If you enter the market with A point established and pull your fibs, can't you enter the trade? If you want to follow the harmonic pattern rules, then I don't suggest that you do all of that, because honestly, looking at this harmonic, I'm actually entering at the A point anyway, because this D point right here, completion. See how the market is flowing? The market moves harmonically. All right, look at that. The market moves harmonically. Boom, one harmonic after another harmonic, going into another harmonic. That makes sense. You see the flow of these harmonic patterns. And the average person eyes can't pick these patterns up. That's why my name is Da Vinci Code on Pip Talk. It's like when I first saw these, I had that aha moment. I was like, yo, what the F? I was like, yo, this right here is the code. I used to call myself the code because the market is like a code, right? Like, and you have to be able to decipher that code, right? And Da Vinci Code, Picasso, all come on now, think about those names, right? Crazy. It's artwork. Some traders want trade if stop loss pips are greater than. Yeah, so yeah, some traders won't do that. That's cool. That's just them. But for the most part, these right here give you 1-to-1. All the time they give you 1-to-1. So looking at this right here, now I have my A leg, my B leg, and what I want to do is identify my C leg. So I take my fill from my A all the way down to my B. I'm looking for that minimum 61.8 retracement. And you can see that we got that. Let me line that up perfectly. All right, there we go. Still not perfect, it's a little space in between that. I like to get surgical on my chart, so everything has to be wick to wick. So now I got that minimum 61.8 touch right here. Price pushed all the way up to the 100%, but it did not close above the A leg. So we're perfectly fine right here. Price pushed up here, but it didn't close above the A leg, so we're perfectly fine, all right? So what I want to do now is take my fib from, now that I have that established, I take my fib from, that's my C point. Now I take my fib from my, and for the Gartley pattern, remember guys, I'm looking for 2 points. I'm going to take my fib from my A point, I'm sorry, my X point all the way up to my A. X all the way up to A. And then I'm looking for this 78.6 level right here. Let me put a trend line right there as well. I'm looking for the 78.6 level. And then what I want to do is take my Fibonacci again and take it from my B point all the way up to my A. B all the way up to A. And I'm looking for that 1272. So let me grab a trend line. And let me set it at that 1272 level. And let me delete my fibs. And now what I have is a zone highlighted for me to go ahead on and enter that trade. So if I take my harmonic pattern, we got X to A to B, B to C, C, complete down here at the D. Let me just extend that out. And this is what we have, all right? This is what I see right here on GBP, JPY. So again, it's all about being patient right now and just waiting for the harmonic pattern to play out and do what it's supposed to do. That makes sense, everybody? Ray, why did you say that the bullish bat pattern for GJ is invalid? So the reason why I said it's invalid, and this is what he's talking about right here. This is that bat pattern right here. Price complete at the 88.6. So this is the bat pattern right here. It missed my entry point for, I don't know how many pips that is, maybe a few pips. So because it missed my entry point, I don't want to go, chasing trades. Let me turn that black. I don't want to go chasing whatever trades or anything like that because price missed my entry point. Price missed my entry point right here. Right here. So I'm going to be conservative and look at the bigger picture. I'm not caught up on this small pattern anymore. Yes, it would have hit my target one and everything. If it had hit my D point, I would have caught like 100 pips off of that move right there. But looking at that, my entry so close to this entry down here is just safer to not expose myself to the market. I want to create as less exposure as possible. I don't want to enter for a buy right here if it comes back down. Then I got all of this drawdown right here plus my stop losses, which is way down here. So it's better for me to go ahead on and put my entry point right here for price to push up and hit my targets. That makes sense. That's 500 pips away. Oh yeah, it is about 500 pips away. So yeah, honestly, GJ could drop 500 pips to the downside. So I would throw a trend line right there, see if market will, you know, break and retest it or whatever, then boom, drop to the downside. So yeah, just sit back, be patient, and wait for it to happen. So I'm gonna go over two things real quick. Let me show you guys everything. I'm gonna go to AUD USD. So AUD USD, look at this right here. Where was I? There was a bat pattern on AUD USD as well. Oh yeah, bearish. So I had a bearish bat pattern right here. Okay. Price dropped down, hit target 1, and then boom, pushed up. My stop loss is right here. My original stop loss was right here, but I put my stop loss right here. Target 1 was hit, price pushed up, scaring people, then boom, it dropped. That's why I like to, you know, be able to have a mental stop loss. Don't do this, guys. That's why I like to do it, because I see this happen all, like, time after time. Price will push way up, then boom, drop. They'll drop it. Stop everybody out, boom, drop. So what I like to do, matter of fact, not what I like to do, but look at this right here. Everybody take a mental picture real quick. I'm gonna show you guys something. Take a mental picture of this, boom. This move right here. You guys got that move? This right here is what we call the shark pattern. Shark going into a 5-0 pattern. Okay, 5-0, the number 5-0, which is a shark pattern. And this is more advanced stuff, okay? I was able to catch this move right here on this wick and caught this entire move to the upside. Saw this bat pattern, boom, sold it right there. Staying in tune with the market, all right? So you all see this pattern right here. Let me draw it out one more time. We got this here. And this is different. This will be my 0, X, A, B, C, D. I got recording on this also, with me taking this trade and everything, and also in my Pip Talk channel. Now take a mental look at this. Now let's go over here to USDJPY. USDJPY. Isn't this the same as that thing? That's the same as that thing, right? You all can't tell me that the markets don't happen. These harmonic patterns don't happen over and over and over and over again. Yeah, there's a lot of patterns. That's why I say stick to one pattern, master it. The reason why I'm able to do this because I stuck to one pattern and traded for a year straight. But guys, y'all see how this is the same exact freaking pattern, and then hit that entry point right here, then boom, took off. And guess what happened? It created a bat pattern. So let me go ahead on and delete this. I was actually looking at getting into this trade right here for a potential sell on UJ. And all I'm doing is trading pure price action. That's it. I'm not trading. I'm not using indicators and stuff like that. I'm just trading pure price action. I'm trading these harmonic patterns based off of price action. See, and what we got right here is a potential Cypher pattern as well. I'm going to show you guys that as well. So what we have right here is a bat pattern. Well, I don't know yet. So let's see. I got my X point. I got my X leg. I got my A point. And this is how I want y'all to become beast-ass traders, all right? This is, like, seriously, I want y'all to really grasp this. I saw the bat pattern on UJ before I jumped. Yeah, exactly. Yeah, I remember. Nice, nice, nice. I want y'all to become beast-ass traders, all right? So I got my X point to my A leg. Price pulled back. I want to measure out this level from X to A to see what this gives me, all right? So let's see. I take my fib from Like I say, everything you guys see me doing is just pure price action. All right, nothing spectacular. It's all price action. So, all right, so looking at this, I can do a few things. Sometimes when I'm trading this, again, I could take this high point, this high point. I'm going to take this high point right here because it gives me my 50% touch right here. So I got that 50% touch from X, A, my B point. I want to see if this point right here from A to B, taking my fill from A to B, gives me a 50% touch. Let's see if I get that 50% touch from A to B. If I do, it'll be dope. Boom, we got the 50% touch right here from A to B. So I got my C leg. And what I want to do right now is go ahead on and B-Stash Traders. Yep. So what I want to do right now is go ahead and take my fib from the entire move. So from X to A, I'm looking for price to give me that 88.6. From X to A. X to A. So I would have my pending order sitting right at 113 point for the sell, 113 point, I'll say 0.9910. I say I'll have a pending order sitting at 113.910. And my stop loss will be at, see how many pips that is. I'll put like a 60 pip stop loss at 114.520. So 114.520 will be my stop loss. But matter of fact, let me do this. One 4 5 20. That'll be my stop. Let me turn that red. And then my target will be that's about 60 pips for my entry. So let me grab my fib again. I'm gonna do 113.920. My entry point 113.920. Let me turn that green. And based off of that entry point, my target will be Renee, I haven't even looked at the scanner to be honest. My target will be this 38.2 for target 1, and target 2 will be 61.8. And my target 3, it'll be open. And the reason why I'm gonna show you why it'll be open is because of this. So let me clear that, and let me see how many pips that is from my entry point all the way down to target 1. Target 1 will be like 47 pips. Target 2 will be about 80 pips. Let's just round it off to 80 for target 2. So this is giving you that pretty much that 1-to-1 ratio right here. Somebody asked about that earlier. So now what I see right now is this right here is my X leg. This is my A point, and this is another harmonic pattern. This is I don't know anybody else that trade this harmonic pattern right here. To be honest, I haven't seen anybody do it yet. I don't want to say I'm the only one who does it, but I haven't seen anybody teach it or went over it. So from X to A, we get that 38.2 touch right there, right here. And this is the Cypher pattern. I think I spelled it right. Yeah, Cypher. So from X to A, I'm looking for a minimum of a 38.2 touch. I got my B point. I'm just gonna go over this real quick. You guys go back and watch the recording as well, because I gotta get off. So from X to A, and this pattern that I'm showing you guys, I traded it for a year straight. All right, a year straight. So from X to A, I got my B point, and this is probably one of my go-to move. This is my go-to move in the market. Now what I want to do is take my fib from A all the way back down to X. I'm looking for a 1272 to a 1414 touch. Let me extend this out. Boom, look at that. I got the 1272 touch that I want. The max that I can go to is the 1414. That's the max, all right? And it hit that thing to the T and it rejected, all right? So now this is my C leg. Like I told, and the harmonic scanner doesn't have this. I'm working on getting them to add this as well. So just stay tuned. It's a lot of stuff going on behind the scenes. So I got that touch. Like I say, this is probably one of the most accurate patterns that I've seen out there. I guess because I trade it all the time. So now what I want to do is take my fib from my X point all the way to the completion of the C point. And I want to enter this trade at the 78.6 for a buying opportunity. So as long as this right here doesn't close above this, then it's still valid. So it can, come down, hit that, and boom, drop. And once it does that, then I'm taking it back to the upside. Oh, snap. But wait, check this out. I just saw something else. Damn. See, this is why you guys got to learn how to trade harmonic patterns. Like, your eyes will just start picking up all these different patterns. Let me show you guys something else. Who can tell me, based off of this X, this move right here, this X, all the way up this level of support, all the way up to the level of resistance, what we're looking for right now? Who can tell me? Exactly, a Gartley pattern. Crazy, right? Like I just picked it up. I literally just picked this up, yo. Like this right here is a Gartley pattern. So now let's do something else. So like I told you guys, these harmonic patterns happen everywhere. So I got a Gartley pattern right now. So we could start looking to see a rejection up here at the zone at this 88.6, because if I look left, what happens? It falls right in the confluence with this over here. Right? So let's see. So we could possibly see USD JPY push to all the way down here to this level down here to 78.6. Let me see. From here to here. We can see USD JPY push down into this zone as well. And this is what I see, all right? These are the potential setups right here. So from X to A, X to A, this is a cipher pattern, A to B, B to C, C to D. Complete at the 78.6, which is right here. Then we got X to A to B, B to C. Wherever this right here stops, let's just say it rejects at the 88.6. And then, let me change this color real quick. And when you got two cipher patterns that line up with each other, I don't want to say cha-ching, but you get the point. And then we got this right here. We got this right here. I took this high, X to A to B, B to C, C to D. Yeah, that's what I got, guys. So yeah, hope you all learned. Got a lot of value from tonight. Don't do a 50 lot, bro. Hope y'all got a lot of value tonight. Definitely glad y'all jumped on this call. It was lit. Creating some beast ass traders. Everybody drop beast ass traders in the chat. Where are all my beast ass traders? Where y'all at? Beast ass traders, where y'all at? Let's go. So yeah, that was great, guys. So I see everybody tagging me on IG. I love y'all. Appreciate that. But yeah, I'm gonna get the recording. You're welcome, Emily. I'm gonna get the recording and everything set up for you guys. That was dope. Whatever markups y'all have, drop it in the Telegram chat, the Harmonic Scanner Telegram. I'm gonna drop my pip talk in there as well, and I'm also drop the recording in there. So stay tuned for that. Promise you guys, when you all train your eyes to see the markets and understand the harmonic patterns, it happens all the time. You just gotta, identify, predict, identify and execute, really. Oh yeah, we definitely have more people on. You're welcome, everybody. So yeah, that's my time for tonight. When do you do this call? I'll be on tomorrow night at 8 p.m. Eastern Standard Time. Definitely, tune in tomorrow night and talk to you all later. And I'll be dropping my Pip Talk channel, and I'll also drop the recording inside the IML Harmonic Scanner Telegram chat. So y'all stay tuned. All right, peace.